Hey everyone, welcome to another video. If you're new to this channel, make sure you have subscribed, hit the bell button and leave a like. Also, while you're here, make sure you've checked out Learning Crypto. It obviously helps. I'll be going over other things in this video too, which can hopefully help you create some passive income. Fingers crossed. Now, title of this video is simple: how to find coins at a fair value sort of thing. You know, undervalue. Get the 10x's, get the 5x's before everyone is jumping on them and aping into things at the all-time high levels. We'll go over the chart. We'll look at certain ways and means to kind of see things from a different perspective. If you're buying in Ethereum, if you're buying in Bitcoin, if you're buying in USD, to help you make a better decision. I am sick of being asked a question: is it okay to buy this? Is it okay? Is it safe to buy this? If you're trying to buy the likes of Dogecoin at 70 cents, it's already gone up like a gazillion percent, your answer is probably no, right? Realistically, okay? You're not going to make much more money out of it. Risk to reward is a term that is often used. How much risk are you willing to put in? Now, here's a myth that I'm going to debunk. I always say this, and it's proven right on numerous occasions, in my opinion anyways. Bulls get wrecked more than bears. Why? Because bears tend to trade. Yes, it's used in margin, but there's always a percentage element to it in terms of what you're risking. You've always got a stop loss if you're a good trader, that is. You've always got certain strategic plays. However, Johnny, age 42, who works as a plumber, gets into cryptocurrency, gets onto Robinhood, gets into whatever app, and he's like, oh, cool. My mate John, round the corner, has just told me to buy this coin. Okay, I got 10 grand. Bush. Oh, it's gone. I always find that bulls get people wrecked more because everyone's more greedy, all that kind of good stuff. You tell your friends, it goes wrong very, very bloody quickly, which is where the problem is. Now, you've got to look at multiples, and I recommend a website called The Coin Perspective. Have no idea who made it. I just love it, right? I'm crap at maths. It makes it easy, right? So this, I need to update this. Hold on, let me just press the refresh button. There we go. It's moved a lot, obviously. So let's talk about it. If you are looking to buy any coin, whatever freaking coin it is, the first thing that you need to understand before doing anything, it's price exposure in market cap. Before you look at charts, before you look at levels, before you look at anything else in terms of other things that you may want to know, the price of it is the most important thing. First base is always, what is the market cap of this coin? Why? Because you're not going to buy the top market cap stock in the world because you're not going to make much more money out of it unless the dividends are unreal. That's usually the rule of thumb. So, for example, the likes of Microsoft, how many multiples will it make? Well, probably not many from now on, realistically. Maybe a few, but we don't know. It's very unlikely. The likes of Ethereum is a great example here. Ethereum, is it a good coin? Yes. Does it have good factors to it? Yes. Will it make you 100x? Probably not. You know, realistically thinking, in my opinion anyway, it's not going to go to 300k. If it does, the world's gone mad. Anyways, let's talk about it. So, let's just say, I don't know, I think of a coin top of my head. Come on, Ash. Ash, think. Oh, I don't know. Avalanche. Why? Because this is similar in some sort of weird and wonderful way regarding Ethereum. Not identical, obviously. But if one Avalanche had the market cap of Bitcoin, for example, as a market capitalization, sorry about the Ninos, it would be worth $5,000. So that would be an upside move of 295x, which is quite a lot, realistically, when you think of the price factor of what Bitcoin is currently. Obviously, Bitcoin is heading towards $1 trillion. So this could be an option where you think, oh, long-term investment hold, okay. The next step to this is the obvious step. And you know what the obvious step is going to be, don't you? It's going to be, let's look at the chart and let's figure out where the levels are. But first, I want to talk about something else. So today's video is provided by BlockFi, a way to put your cryptocurrency at work. Now, I'm going to talk about levels and ways you can find these levels and ways you can sit and wait. Now, I'm going to talk about a few things about retracement, the retest. But if you're waiting and you've got some spare equity and you're thinking, well, it's going to sit in a wallet and do nothing, or it's going to sit in a wallet and do something, this is where we're going to go with it. So if you are looking to invest in BlockFi, using my link, blockfi.com/cryptomobster, you can get some free BTC. However, the way that I play this game, and I've already mentioned it before in previous videos, 7.5% return is quite nice, especially when you get paid in Ethereum or Bitcoin or Chainlink or whatever it may be that you want to get paid in, which is relatively good, even Litecoin if you so wish to. Now, at the end of the day, fundamentals are clear in cryptocurrency. Numbers tend to go up with scarcity. Bitcoin, now Ethereum has an element of scarcity with the burning. So certainly a great place to kind of sit on your hands essentially and let it work for you, because you're never going to get this interest on a bank. You're never going to get it realistically in a stock market. If you're using stable currency, it sits there. It's great. There's no value downside unless you're in a weird country and the forex market takes a complete tumble and you lose it versus your dollar. But realistically, that's unlikely. However, that being said, it's a really, really simple way of doing it. And also, sometimes you can be waiting a long time for certain levels to hit, especially if you're looking at different metrics. So let's go back to the charts. So as I said, as we move this, Ethereum's doing well right now. Not a bad play to be in, basically, realistically, over the long term. However, we're going to look at Avalanche. Why not? Because it's just a random coin that I just picked. Now, it's doing okay, but it's also retraced quite a bit. It's relatively new as well on Binance. If we're looking at the BTC pair, again, it's still down. And if we want to, as well, another way we can do this, again, if you are using the likes of TradingView here, you can essentially, you can put the Ethereum, oh God, errors. You can actually find the Ethereum chart as well, which is obviously here. Well, yeah, we got Binance one. Give me Binance. Give me Binance. There's not going to be a bat. No, they freaking don't. We'll use that chart then, just to be awkward, because you're an ass. Hold on, press symbol. There we go, idiot. There we go, right? So you got all these different metrics, right? And we're going to talk about each individual one of them, right? There should be 3 that you should be realistically looking at. 1, USD, kind of obvious. 2, Bitcoin, kind of obvious. And 3, Ethereum, not so obvious. However, there's a method to the madness here. Now, with the world of cryptocurrency and stocks and property, commodities, whatever it may be, right? Numbers go up, numbers go down. With scarcity and looking at the overall trend in cryptocurrency, it tends to be going up for the most part because it is the top growing asset of the last decade. Quite good. Now, I want to explain a few little tricks and tips that you can have when you are doing. 1, you must do your research before all this. 2, you must see is a fair value potentially in terms of a long-term objective with the roadmaps and where it could go in terms of competition. Yes, okay, understandable. And obviously the other one is levels, right? I got battered by trolls and internet abuse for basically putting a level out on Bitcoin saying, well, 12K's level, 20K's level, 25K could be a possible level, 30 or 28K was a level, and then I went 31 or whatever it was, 36 and 46. I can't remember what the exact levels were, right? We're kind of above that. We're around that 46K level, right? Key levels are very, very important of a chart structure. Now, the first key level, you've probably already noticed it. It's this one. This level, this area around here is a level. Why? Because it's got price action there. So, here we go. This is not a prediction, it's a key level. Why? Because I'm not going to short it. Why? Because I don't think it's ever going to get there for a long, long time. However, if the world falls out, if the regulations go wrong, and the market goes totally bearish, well, guess what? There's a level there that it could eventually go to. You just don't know. Don't be that new person who is so naive to think that prices just continue going up, because harsh reality is they also go down quite a lot. Cryptocurrency is aggressive, it's volatile, it's awful, realistically. If you asked me in 2017, and telling me that Ethereum's never going to go below, $700 again, it went to 82, and that was already from 1,400. So it already reduced by 50%, and then it went fricking to the floor, literally. So anyways, let's talk about it. Levels are incredibly important because no matter what way you look at it, you are always going to find someone that is going to be talking about a level or looking at a level in some sort of situation. I'm on the log scale. I thought it looked a bit strange. Anyways, so you've got all these levels here, right? We only want to focus on the ones that are kind of in front or around us, right? So realistically thinking here, we've got a lot. We've got a lot to look at. There's a lot of levels to look at. There's a lot of considerations. Certainly, if you're thinking long term, you want to kind of get to a point where you can actually get in. So another top tip, by the way, just a big one, don't just wait for it. If you can get in at a retracement or a correction, get in. If you are thinking longer term, thinking, well, I may never get to this point or level, cool, that's fine. Just find something else that may be a better proposition. So what's happened here? Right, let's talk about it. Avalanche is a great example in terms of looking at the overall trend because it is starting to go bullish again, right? As you can see, it's like boom, boom, ooh, hello. With broken structure, it's looking good. Now, when you start zooming in though, you're going to start noticing a moving average. This is the EMA 21 if you're wondering. Usually, this is the trick. This is the trick that I play. Whenever it goes towards it or too far away from it, it's where the catalyst happens. If it goes too far away, it's a good time to take profits. If it goes towards it and it acts as support, it's a good time to buy. Right? Weird, that one. You can also use Fibonacci. So, for example, if you're going to go from the overall structure to this point here, going all the way across, it hit the 382 on the nose and popped off, right? 2 modes of confluence. 1, EMA support. 2, Fibonacci support. 3, as well, previous levels of support in around this region as well. Huge levels of resistance, and it is now flipped to support. So that's 3 points of contact, essentially, right? Okay, makes sense. How to get in on a retest. You wait for the pullback, right? This is going to pull back at some point. Whether it pulls back aggressively or not is another story. Why? Because if this is a top, it's an open candle, you're going to be looking at the obvious here. Why? Look left here. Look at where all these wicks are. Look at all this kind of information is. You got all these wicks, penetrations, resistance, wick. Yeah, cool. You may well get a fill around $14 potentially, or even maybe a bit higher if you go a little bit more into the 15. It's a level. Make sense? Comprende. Cool. That makes sense. Cool. Happy days. Right. So, where was I going with this video? I can't even remember now. Anyways, if you're looking to get in, you should be looking at getting in on a retest. Don't just ape into it, because if you're brand new and you're like, hey, I'm going to buy it here, shit. And it goes down to $14, because what I said at the start of the video, bulls get people wrecked. Why do they get people wrecked? Because if we're going to go on a natural situation here, and you've put 10 grand in, for example here, I know not everyone's freaking filthy rich, but the example is simple. If we go and retest and go towards that $14 level, which I mentioned, we could correct 17, 18, 19% in a matter of 3, 4, 5 days. It's pretty horrible, isn't it? So you do the maths there. How much money do you want to lose? Do you want to lose basically 180 quid, $200 or whatever euros? Probably not, no. Especially if you are in spot, especially if you're only playing with $1,000 there. But if you play with $10,000, guess what? $1,700 gone like that. So be freaking careful what you do. That is why you wait for corrections. You wait for the support levels. Always buy supports. Now, when we're looking at fair value as well, and I mentioned it at the start of this video, you want to try and look at a coin that could, in theory, look to go up more than go down. Now, Avalanche, that kind of fits that bill, essentially. Not every coin does. But when you start to look at the gravity of it, well, all-time high levels on USD, 11th of February, and we're currently down 72% from that level, right? Yes, we have not moved up much. You need to do your fundamentals, your checking, and all kinds of good stuff. But realistically, the probability is on your side. If you have got $10,000 and you're aping up here because you cannot freaking wait and you're not waiting for a pullback, well, you're going to get wrecked. Now, methodology number 2 is if you're playing with Bitcoin, right? This is a little bit different. It's a timing mechanism, so use a Bitcoin dominance chart. When that is looking to go up, you may well find some nice little discounted values. Now, over time, we have done a nice little correction. We went from roughly 39%, went up to about 50% or 49%. And what that has given us is actually a nice little reward, certainly if you're waiting. If you are looking to wait and say, for example, we were looking at, say, this peak here, which is essentially when it went up to a certain level, all the way down, it's 60% down, which is pretty good, realistically. Now, the elements of this is this could go much higher than the USD prices because obviously it's factored in by the Bitcoin price. If Bitcoin is sluggish and boring and this goes on an absolute worldie, it'll outperform Bitcoin, therefore you're making more BTC. Hope that makes more sense. You can do the exact same with Ethereum. Now, Ethereum dominance is relatively high right now. Why is it high? Because everything's going off on Ethereum. It's getting towards nearly all-time low levels. So fair value here. I've got a little bit of Ethereum here. Ash said to me before, well, what's the point of buying Ethereum with capital? Because you're not going to make much capital gains over multiples, are you? Well, no, you're not. Because it's common sense. What are you going to try and get, a 10x? Well, good luck. It may happen, but it may not happen overnight. Put it that way. However, in a cycle, in an alt season, where maybe Ethereum loses a bit of ground over BTC, or it loses ground over altcoins, you may well find there might be a little bit more gainage here. Let's just say, for example, the world resets a little bit, right? And we're going to go up to, say, this level here. That's a 4x. So if you've got 10 Ethereum working for you, it's a lot of money, I know. I shouldn't have said 10, but we're going to say 10 anyways, why not? And you've got a 4x on that. Well, the amount of profit that you're going to make is potentially going to change your entire portfolio. And guess what? Ethereum could be very, very sluggish at this point. This might even grow without you even realizing. Sometimes that happens. I've had it in the past before. I've had it when in like previous cycles, bull cycles, I've been looking at my portfolio and thinking, wow, why is that so high? Oh, okay, that coin's just done incredibly well versus everything else. It's important to look at that. So you may well find that this will go up a little bit. It may not go all the way up that high, but even if it goes up to like this point here, 120% up, you know, if you've got some Ethereum sitting in that, or if you're sitting in the altcoin, you want to take profit into Ethereum, you can. And that's one thing you can do as well, because when you look on the exchanges, you can sell into Ethereum as your main currency. Fair one, makes sense. Especially when you go on the Ethereum dominance chart and you notice it going down. It's currently relatively high. This is why the BTC dominance has not gone up enough to basically start jumping into altcoins. I have been buying into altcoins because they've been low. Some of the coins I've been buying at 80% down on what the tops were, with good solid fundamentals for the long term to potentially get even more price action out of it longer term anyways, without worrying about the USD price, especially if we are still in a bull cycle. So fair value is important. You need to see what coin you're buying. You need to see the research. You need to see before you even get to that point, is it worth actually looking at because are the multiples there? Am I buying something that's technically overvalued? You need to look at those, and they're very, very important. Then when you start looking at the chart, you're thinking, wow, monthly levels, wow, weekly levels, cool. And this is where I want to go back to the chart on Avalanche. It's not hard to do this. You can just look at key levels of where price structure has been in the past, right? Cool, yeah. But even if you go to like the weekly time frame, zoom in on it and look at the obvious. Look at where the obvious things lie. If you're looking for the obvious, and I'm going to remove this one here because it doesn't look very obvious. You got these levels here. You've got this level here, and I'm going to move this up a little bit where the body closures are. Wick, wick, body closure, body closure, body closure, wicks, and all kinds of. That is a concrete level. That's $10 roughly. Find another one. Why? Because when you start looking at this one here, that's at that $13 level roughly. You got all these resistance levels here. You got wicks, 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 resistance, 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 all kinds of good stuff, and then it breaks through. Now the next level, we are currently on the EMA 21 on the weekly time frame on Avalanche right now. Cool. Guess what's going to potentially happen here? If this breaks out, it may well be a nice little level to start looking at, because once it actually goes up and comes to support, that could be an investment level for a lot of people. That's the point. Levels are key. If you're buying strong support, it's fine. And look at how much upside potentially this has got to go. Realistically, when you think about it, even if you're going from this wick here to this bottom, there's still a long way to go potentially. So, as a random video goes, I hope this helps in terms of finding potential entry points for certain things, especially on a retest, especially on a correction, especially for the essential levels of like monthly support levels, putting your orders in. I know obviously a little bit late in terms of stuff like this, but to try and show you guys how it kind of works, it's very, very important. But fundamentals are more important. If you found a coin that literally is undervalued versus what its competition is, that's a good tick in the box. If they've got good long-term kind of ambitions, roadmap, good team, or good product that has tokenomics that will create a token flow, which will then create its utility, even better, right? But you've got to be careful. Don't ape into it. And as I say, if you're just on spot as an investment and you're not buying retest or support levels, stand by, because if you're buying into a downtrend and the dip keeps on dipping, you're just going to lose all your money very, very quickly. So if you enjoyed this video, leave a like, leave a comment, let me know how you're doing, let me know what you're having for dinner. Cool, I'll see you later.